What's up everyone, it's Scotty with MoneyVest. So markets continue to rip higher on the back of semiconductor rally here, and chip stocks are going absolutely crazy on the back of Nvidia's earnings. I mean, just a brand new all-time high, market cap now sitting at close to $2 trillion for Nvidia, and the entire semiconductor stocks here were just absolutely ripping, with SMCI up another 32%, back over $900 per share. AMD up over 10%, Broadcom up a little bit over 6%. So you got lots to unpack in this market update here. As always, if you enjoy this video and find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the members only private videos, and more importantly, March 31st is the date when we have our moneyvest.com launch of the beta, and you will have access to all the benefits, all the features, and of course you can provide us feedback so we can improve the software for you as well. So link's going to be down below if you want to join, access all the members only private videos, Excel spreadsheets, and the Discord access with all the trade alerts and buy and sell alerts. And this right here is going to be my Instagram, so do connect with me over there as well, because I do post a lot of interesting stories, updates, portfolio updates, tips, strategies, polls, all that stuff. So the AI stock rally is ignoring some big risks, as I'm sure this was something that we expected was going to be there as a headline, because as stocks continue to push higher, the risk is also increasing, right? As the price goes up, risk goes up. As price goes down, risk goes down. That is something that we have discussed on our channel over and over again, because a lot of people tend to forget that prices going up is actually becoming quite risky versus prices going down. The risk is getting off the table, because your future returns are completely dependent on the price paid, right? So that, again, we've talked about this and these concepts in the past, that what you pay for a price for any particular asset or stock or investment is quite literally going to be the most important determining factor of how your returns will be in the future. If you overpay, your returns will be lower. If you underpay, your returns will be higher. And Dow poised for a fresh record as Nvidia earnings spur global stock market rallies. So this was a lot of optimism, a lot of stocks going to the moon on a global basis, not just on a US basis. And top 2% fund manager warns that Magnificent 7 look like Nifty 50 2.0 as well. So I want to tell you that there's going to be a lot of headlines. There's going to be a lot of sort of bearish articles. There's going to be a lot of negative headlines. So what I would recommend myself to do, what I'm actually doing myself, is ignoring a lot of the noise. And my goal, my purpose going into 2024, as you know from the beginning, was to keep it very, very simple, to not overcomplicate things. And I mentioned this in one of my videos in the beginning of January. I said that I'm going to keep it super simple and I'm not going to overcomplicate things. And what I mean by that is that markets over a long term, generally speaking, tend to drift higher and higher. They continue to push higher and higher to new all-time highs. So knowing that, I'm not going to position myself with this prediction of a market crash or a market sell-off. I'm mostly positioned long. In other words, I am betting on the markets keep growing and they keep pushing higher, they keep doing well. And at the same time, we'll be looking at market valuations, technicals, and macros to hedge, rebalance, and de-risk a little bit from time to time. But the overall idea would be to continue to dollar cost average into some of these ETFs, some of these stocks that I do find very valuable, very undervalued per se, and will continue to bet on them for the long term, going higher and hitting new all-time highs. And with these market crash predictions, with these Nifty 50 predictions, with the markets selling off, let's say 70%, I mean, nobody really knows at the end of the day if that's actually going to happen, right? Nobody in their predictions of all predictions can actually understand or know what's going to happen. So keep it super simple, ignore a lot of the noise. There is really very, very few things that our focus needs to be, and our time and energy needs to be spent on very few things. So this right here is VUG. I'm up a little bit closer to 17%. I was down close to 18-20% last year, or actually in 2022, on this particular position. And over time, I've been able to build this up to a significant size, and of course, up almost 17%. This is SMH, up almost 32%, right? So this has also been again, a big part of the dollar cost averaging experiment. And the third one is the CIBR that I'm also dollar cost averaging into. I'm up closer to 6% on that one already. So again, if you want to get access to all the links, we're going to keep it super simple. We're going to find quality, high quality businesses and stocks that are going to do well, that are expected to do well, and of course ETFs that are worth dollar cost averaging into. This is very, very good exercise for beginner investors as well, because if you are just getting started, the first thing you need to do is build a strong foundation of your portfolio. And I think ETFs can do that because they bring a lot of diversity, they bring a lot of discipline, and they bring a lot of conservatism in your portfolio. They're not as volatile, and they can give you a lot of confidence to go out there and start actively looking at individual stocks as well. But it's the building that solid foundation through ETFs that is very, very important, and should be, in my opinion, at least a part of everyone's portfolio to some extent. Now, this right here is the entire market. So Nvidia, Broadcom, Amazon, Microsoft, Meta, Google, Apple, everything pushing higher. Visa, MasterCard, Eli Lilly, just all sectors ripping through. And this right here, utilities, was the only sector that was down. Everything else was pushing higher. In the last 1 week, we had, again, all sectors pushing up, with communication services slightly down. In the last 1 month, we've got, again, all 10 sectors in the green. Real estate is the only sector that is selling off. Lean hogs, we got cocoa prices, oats, rough rice, wheat, canola, corn, all pushing up with volatility. Natural gas and coffee prices selling off here. Bitcoin back over 51,000 and Ether just under $3,000 as well. So this right here is Nvidia, and as you already know, just hitting a new all-time high, closing pretty much at the higher end of its range, and you'll notice $785 is where we're at the moment. You know, market cap approaching closer to $2 trillion. But before we get to individual stocks here, let's just quickly dive into the crude oil prices. $78 in the month of February, though. We are once again green, up a little bit over 3%. So the next couple inflation reports, I'm not super confident, because there is a possibility that we do see energy increase month over month, because both January and February prints were green. So far, February is also a green month for crude oil. So that is something to keep in mind. Volatility did get bought up here intraday, but still down about 5% on the day here, back under 15. So again, trading very much within that range. Red rectangle between 11 and 12.7, with, of course, a resistance to the higher side at closer to 15 for volatility, all the way up to this green rectangle between 18 and 20 levels for the VIX as well. Now going over to Bitcoin here, just again consolidating sideways at that support of 51,000. So that is going to be that level to keep in mind, and a resistance and a target back up to over $70,000. And Ether here also moving higher from that support very, very nicely. And the next target and resistance is going to be at 3,500. But of course, it is incredibly overbought here, so I wouldn't be surprised to see a bit of a pullback before rallying back higher to trade back up to its target of 3,500 as well. Now going over to S&P 500, so SPX getting bought up here very, very nicely, hitting a fresh new record high of 5,087, 5,090 levels for the markets here. So absolutely incredible how it approaches 5,100 with a huge breakout on the back of semiconductor stocks here. And support level, of course, at the low end is going to be 4,800. So that is going to be that support level to keep in mind. And of course, we're seeing a big breakout of that resistance beyond 5,000 points for S&P as well. And the RSI MACD continues to be a little bit more on the negative divergence side here, but the markets keep drifting higher. And that's exactly the whole idea, right? It is almost impossible to correctly and accurately predict market sell-offs, market pullbacks, market corrections. We can get a good understanding of the risk and reward and know that, okay, there's a negative divergence, the markets are overbought, markets are concentrated, we're seeing the volatility that is really low. But even then, we have no idea when exactly that pullback is going to take place. So with that understanding, I think it's a much better approach to stay long, which, you know, we are always, almost always. I'm almost always long. I've never been short, net short on the market. So it's important to stay long while at the same time look at the risk reward and then start hedging or then start selling calls to potentially make money from this pullback or this correction, and at the same time rebalance a little bit. So if you want to take some profits off the table, that's also welcomed, and de-risk and raise some cash for that potential pullback, and then you can dollar cost average back into the market, considering that the valuation right now is not that favorable. So there's a lot of things that you can do instead of predicting a sell-off and then immediately selling all stocks and going short and then hoping the market's going to crash here so that you can make money on those puts, right? That is a very low probability outcome versus the one that I shared of staying long, because markets continue to drift higher. They can drift higher to new all-time highs on a lot of news. And that's really what ends up happening over long periods of time. If you have been investing for over 15 years, the probability of you making money in the market is over 99.5%, right? So probability of you making money on the long side is really high if you stay long for over 15 years. So again, when you look at those stats, you kind of get a good idea and good understanding of what to do and what to avoid in the market. NASDAQ here pushing up almost 3% on the day, trading up to 16,000. And this right here is going to be the resistance of 16,200, and support level is going to stay put inside this green rectangle, 15,150 to 15,400. Those right there are going to be some levels to keep in mind for the NASDAQ here. Just again, new all-time highs, almost approaching its new all-time highs at 16,200. So NASDAQ's very close to getting up to its new all-time highs here at the moment. Now talking a little bit about Apple, and Apple here on the day also pushing up over 1%, so back from that support of $180, which we discussed in our previous video. So this right here, $180, validating that support and now potentially moving its way back up to $189, $190. That is going to be that resistance to keep in mind for Apple. Amazon, on the other hand, also pushing up to over 174, 175, getting back up to almost its 52-week highs. This is going to be that resistance of 176 for Amazon, and a breakout beyond that is going to put us on the map to getting up to $190. That's going to be that next target to watch for Amazon moving forward as well. Tesla, on the other hand, is also struggling a little bit, so it's not really seeing a lot of momentum. Unlike Nvidia, very much unlike Amazon and Google and Meta and all these companies, Tesla is still struggling in the 190s, sub 200s. It's not really able to find that momentum, find that ground to start rallying again. But this right here is that resistance to keep in mind between 198 and $210, $211. So if you do get a breakout beyond that, resistance is going to be, and target's going to be up to 244 for Tesla moving forward, still within the context of this downtrend of lower highs and lower lows once again. Talking a little bit about Nvidia here, and Nvidia on the day, of course, as we already know, hitting a new all-time high, market cap approaching almost $2 trillion. It was selling off a little bit, and then a huge gap up on just absolutely stellar earnings, breakout beyond its new all-time highs of 745, and hitting highs of almost $800 per share. So it's just been an incredible rally. 16% is no joke for a company that's already trading at almost a $2 trillion market cap. So congratulations to everybody who has had Nvidia in their portfolio, trading Nvidia, investing in Nvidia, because this has just been an insane rally for the stock here ever since that breakout from that ascending triangle. The stock is now up a whopping 67% from that breakout of that ascending triangle. Now AMD picked up really well. I mean, I was not expecting AMD to break out so aggressively. I mean, it was only up like 4 to 5% in the beginning, and then it kind of really caught up to the AI train, and it pushed up over 10% on the day on the back of Nvidia earnings. Still coming up to that resistance, so we're not quite breaking out of that resistance just yet. So this is going to be that level between $180, $185 per share, and support level is going to stay put at 159, closer to 160 for AMD. So lots of consolidation sideways for AMD. Resistance is going to stay put at 180, 185, as we've already discussed. Support level at 160, down to $130 per share for advanced micro devices. Talking a little bit about Meta platforms, and Meta here on the day also pushing up almost 4% here, so getting up to new all-time highs of just under 490. This is a resistance that we have discussed in our previous videos, so that is going to be a very important level to watch, with the support level sitting roughly at 451 for Meta, and just a lot of consolidation sideways in that range, and a breakout is going to pretty much be the all-time high. We've got a gap that may or may not get filled. RSI, MACD, once again, a little bit overbought with some negative divergence. So we got to be careful with a lot of these companies, because any time now, any day, this has been long overdue. We could see some profit taking. Right now, we're just drifting higher and higher, with buyers kind of stepping in every single pullback that we get. Netflix here, resistance is going to be all the way up to $600 per share. So that is the target, that is the resistance. Support level is going to stay put at 571, 572 for Netflix, with a huge gap that may or may not get filled in the 500s, mid 500s, all the way down to a very strong support and area of demand in the sub 500, closer to 495, 496 levels for Netflix as well. Talking about Google and Microsoft now. Google pushing higher, up over 1%, but intraday there was some selling pressure. This is a support in the 140s and 144. Resistance and targets back up to 150 for Google. Lots of momentum. RSI MACD actually, in fact, looks really good for Google to start trading back up, considering how oversold it still is. And if you do see that momentum back up, 150, 151 is going to be those resistance and those target levels to watch. Microsoft, on the other hand, also pushing higher very nicely on the back of AI, up over 2% and bouncing off of that higher low very, very nicely. RSI MACD also looks somewhat decent. If you do get that crossover from the MACD over that signal line, that is obviously going to lead to some more bullish momentum, and resistance is going to be back up to 421 for Microsoft. And finally, we got Enphase to deal with, which was, I think, also down on the day. So huge underperformance, very significant underperformance from Enphase relative to the market, down about 2% here. So that is not something that we want to see, because markets were up 2 to 3%. Enphase down 2%. That's a big underperformance here. Resistance is going to stay put at close to 138 right now. We're getting rejected a couple times over there. Support level in the low 100s for Enphase at the moment. So lots of consolidation inside this green rectangle for Enphase as well. So resistance is going to stay put at 138 all the way up to 151 for this company. So hope you all enjoyed this video and a complete update on the market. Semiconductor stocks absolutely ripping higher and taking the entire market higher with them. And we'll just continue to monitor the risk reward and the positions, and keep it very simple in my opinion. So don't overcomplicate it. And that's going to be the idea. That's going to be the goal for 2024. So keep it simple, make money, and just go our way. Just be happy with the returns that we're able to generate, not go out on the risk curve to generate more, because that is greed, and we already know what happens with greed is that you end up in very wrong positions over time. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us and getting access to all the members only private videos, getting access to trade alerts, moneyvest.com website. The beta launch is going to be on March 31st, so links going to be down below. As always, happy investing. I'll see you all in the next video.